Good morning and welcome to Storm Stock Solutions. I'm Grant Mercer and we're getting you set up for the trading day ahead, bringing a little clarity through the chaos before that opening bell. The big overnight story in equities is Tesla. According to reporting from MarketWatch, Tesla just logged its first record close since December 2024. That puts it back in all-time high territory and reinforces the continued dominance of the so-called Magnificent Seven in the major indices. When a mega cap like Tesla is making new highs, it tends to support broader risk appetite, and traders will be watching whether that strength carries into the open or invites some profit-taking at these levels. Stepping back to the macro tone, the backdrop is still all about the Fed's recent rate cut and what that means for the real economy. MarketWatch highlighted a piece capturing what a lot of households are feeling right now. We all have economic jitters. Even with lower policy rates, people are seeing layoffs, shifting company agendas, and pockets of financial stress. For markets, that mix can be odd. Easier monetary policy is usually tailwind for risk assets, but if job worries deepen, you can get a divergence between the stock screen and Main Street sentiment. Traders will be parsing upcoming housing data and consumer-insensitive names for any sign that lower borrowing costs are starting to unlock demand, or if caution still rules. Let's talk about where strength has been showing up. On the opportunity side, there are two key themes catching attention. First, housing-linked trades and ROI-sensitive areas more broadly. That, should my son buy a $600,000 house after the Fed cut rates? Debate, as MarketWatch framed it, is shorthand for the bigger question. Do lower rates revive housing and construction activity? Or does job insecurity keep buyers on the sidelines? Pros will be watching home builders, mortgage lenders, and housing-adjacent retailers as a read-through on whether this rate cut is actually translating into new contracts and spending. Second, cannabis stocks are firmly in the spotlight. MarketWatch reports that pot names kept blazing higher after President Trump said he's very strongly looking at an executive order to reschedule cannabis. That sparked a sharp policy-driven rally across the group. Historically, these moves can be volatile and headline-sensitive, but in the very short term, that's an area traders are watching for momentum, crossing currents in volume, and any follow-through commentary out of Washington that either confirms or walks back the rhetoric. On the flip side, one pocket of the market to handle with care this morning is media and entertainment, specifically around the Paramount, Warner Bros. Discovery drama. According to reporting from MarketWatch, Paramount Skydance's $108 billion hostile bid for Warner Bros. Discovery took a hit as Jared Kushner dropped out as a financing backer. That injects new uncertainty into the deal map. For merger arbitrage funds and media investors, that raises questions about whether the bid can be restructured, repriced, or potentially stalls out. Expect more volatility in those names as headlines trickle out, and the market reassesses probabilities around any combination. Beyond that, there are a few under-the-radar stories that could matter more as we move through the day, and I'm treating these as watchlist material, not calls to act. One is retail data and privacy. MarketWatch has a piece on store loyalty programs harvesting personal data and potentially using it to charge certain customers more. If that consumer data narrative gains traction, it could feed into ongoing debates about pricing power, personalization, and regulatory scrutiny for large retailers and data-driven platforms. Investors will be watching whether policymakers or consumer advocates pick up this theme. Another is the slow integration of crypto into traditional retirement channels. A MarketWatch article outlines one way people are getting crypto exposure inside 401(k)s even before most employers formally allow it. For markets, the question is whether incremental institutional and retirement account demand becomes a steadier bid for digital assets, or whether volatility keeps plan sponsors cautious. It's not a front-page market mover today, but it's a structural trend worth tracking in the background. And of course, hovering over all of this is the broader global macro story, including concerns about the dollar's long-term dominance. MarketWatch notes worries around China pushing alternatives to the dollar in key commodity markets, which, if it continues, could have long-run implications for U.S. purchasing power and multi-year currency trends. That's not an intraday catalyst, but it's part of the big picture risk set that professionals keep on their dashboards. So to sum up your pre-open setup, Tesla's record high puts mega-cap growth back in the driver's seat. Cannabis stocks are riding a wave of policy speculation, Media names tied to the Paramount, Warner Bros. Saga look fragile, and beneath the surface, loyalty data practices, crypto and retirement plans, and the dollar's role all sit in the background as evolving storylines. We'll see how futures and early trading digest all of that, and I'll be back with intraday updates once the market is underway. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.